Financial Bunny TV.
My name is Nicolette Mashile, also known as the Financial Bunny. And today I want to talk a little bit about your investment objectives. And the reason why I want to talk a little bit about investment objectives is that I find quite a lot of people who have taken up investment products or funds and all sorts of things. And every single time I ask them the question of why have you chosen this specific thing, many people can't give me an answer. Now, when we are investing, we've got a reason as to why we are putting our money away for future use. Now, the question you need to ask yourself is, with this specific investment, what am I trying to achieve? Now, for me, I want to speak about 4 different types of investment objectives today. Now, remember that none of my videos constitute as financial advice. If you are looking for financial advice, you need to speak to somebody that is certified and registered with the FSCA. Now, you know, I always use the analogy of a car. When you get into a car, let's say, for instance, you want to move from Johannesburg to Pretoria. The car that you choose to move you from Johannesburg to Pretoria, there is a reason for it. You either get into a sports car because it's fast, or you're getting into a bus because you want the comfort of everybody else that's in the bus, or you think it's safer, you're getting into Gautrain because you know it's going to get you quickly, but you know that half of the time you might not have network, but you don't mind those kind of things because the speed is important. Those are objectives. Those are traveling objectives. For some people it's comfort, for some people it's getting there as quickly as possible, for some people it's getting there as safe as possible. So if you look at the traveling objectives, when you are choosing your investment vehicles, whatever asset class you're going to be investing in, whatever mutual fund you're going to be investing in, you need to make sure you understand what your own investment objective is. Now, your investment objective and my investment objective might not look the same, which is why you and I might not go for the same type of financial investment product. However, there are products maybe that speak to a specific investment objectives, and I'll give you examples of a couple of those, right? These are the 4 investment objectives that I'd like to speak about. The first one is capital preservation. The second one is capital growth. The third one is asset appreciation. And the fourth one is asset appreciation and income, right? Or even income generation. So not take away the asset appreciation and the last one and just leave it as income generation. So what exactly am I referring to when I speak to capital preservation? Basically, when you're talking about capital preservation, is you want to preserve the amount or the value of the money that you are putting away. So let's do a quick example. Let's say, for instance, you want to go and purchase, or you want to put together 10,000 Rand as a deposit for a car in the next 3 years. You want to buy a car in the next 3 years, and you need a deposit of 10% for a car that's 100,000 Rand. So of course, 100,000 Rand, the deposit is 10%. But you want to buy this car in the next 3 years. Now, because of a thing called inflation, which is the rise in prices of goods and services, a car is a good. So in other words, the price of the car is probably going to go up, right? And now the 10% that you have saved as 10,000 today is not going to be enough in 5 years or 3 years time, right? We can all agree on that because it's no longer going to be enough for whatever the price of the car is. Let's say, for instance, the price of the car in 3 years' time is now 110,000 Rand. It means that the 10,000 that you are saving today is not going to be enough. Why? Because the 10,000 has essentially lost its value because it does not give you access to what it will give you today in 3 years' time because of a thing called inflation. So what you want to do when you're doing capital preservation is you're putting your money away somewhere where it will beat inflation and retain its capital value. That's what capital preservation looks like. So there are instances where people are investing simply for capital preservation. Are you really investing? Some people call that saving, which again is another thing that I'd like to clarify. I know that in the book Rich Dad, Poor Dad, Robert Kiyosaki speaks about savings are for losers. Savings are for losers because people assume that saving is only for capital preservation. But it's not always that fact. Sometimes you save so that you can invest. So even after 3 years, you can decide that that 10,000 Rand that you put away today, you actually want to put it into another asset that either appreciates, gives you an income, or gives you some sort of appreciation. Right? For some people, even an investment a car can actually be seen as an investment, because a car can allow you to open up money-making opportunities. So that asset, a car, can be a business car that you're going to use in the business to make you some money. Now, you've taken them savings and you have now put them into an asset, and essentially you are now making money. So capital preservation is not always a bad thing. And I'll give you another example. Sometimes when you are investing in a pension fund, what the guys will do is, for a certain amount of years, they'll put your money into an aggressive fund where you are making as much money as possible. And then when you are nearing your retirement years, they will de-invest you from the capital growth funds, and they will put you into a capital preservation so that you preserve the value of your money going into retirement, and so that you don't expose your money to any types of losses in case the market does whatever the market does just before you get into retirement. So that is one objective of investing. The second investing objective that we're going to look at is capital growth. Now, what you're trying to do with capital growth is you are saying, I want to put 5,000 Rand today, but I need my 5,000 Rand to be double in 7 years' time. Remember, the rule of 72 says it takes 7 years for your money to actually double. Right? Now you're saying 5,000 Rand that I'm going to be putting away either today or over the years, I would like it to be 10,000 Rand in 7 years' time. So you want your money to actually grow. It's more than growing above inflation. So it's not, so when you are racing at the 100-meter start line, here is your money, here is inflation. Instead of running with inflation like you would when it comes to capital growth, you want your money to actually grow faster than inflation. And that is what capital growth looks like. Your money buys you more than what it would buy you today in 3 or 5 years' time, or 7 years' time in this regard of this example. So this is something that you want to do. And generally, capital growth also happens due to what is called compound interest. Remember, imali izala imali. So when you make 10 Rand from 100 Rand at 10% the first year, next year when your 10% is calculated, it's now calculated on 11 or on when you make 10 Rand of 100 Rand, yes, it's now calculated on 110 Rand instead of the initial capital of 100 Rand. So that is your capital growth. The next thing that you can look at is called asset appreciation. Now, generally, we are all investing in assets, right? So if you're investing in the stock market, that's an asset. Equity is an asset. If you're investing in the bond market, bonds are assets. If you're investing in the money market, cash is an asset. If you are investing in real estate, property is an asset. If you are investing in commodities, whatever commodity it is that you are buying is in essence an asset. When we talk about asset appreciation, we're talking about the avocado being 30 Rand for an avocado. And because of law of demand and supply, the avocado now grows and becomes 50 Rand for one avocado. We're talking about you buying a property at 100,000 Rand, and then after a couple of years, it's now retailing or selling at 300,000 Rand. That's when the actual asset appreciates in its price. Make sense? So the price and the value of the asset has also appreciated. So that's when we talk about asset appreciation. That can become an investment objective. So if you say, I am investing in property, one of your objectives would be, I want to invest in appreciating property, not property that is depreciating and all sorts of things are happening. So that's why we sometimes say you can invest in a car. A car can be an investment, but it can have a different investment objective. It's probably not asset appreciation, but it can be one of the other, and it can be what is called the next investment objective that I want to speak about, which is income generation. Now, income generation is also an investment objective. Why is income generation an investment objective? Because you can buy an asset that can give you an income right now. So if you are that type of person who says, I'm investing for now, I want to see my money now. I don't want to be waiting for my property to appreciate or for my car to do that or when I sell. So you are essentially an investor that says, I want to see the growth or harvest. I want to harvest my investments right now. But at the same time, you can choose whether you want to invest in assets that are going to appreciate or in assets that are going to depreciate. But you still want that income that comes from them. And if it's depreciating assets, you must make sure that the income that you derive from that asset at some point needs to reach break-even level. So it must pay for the asset plus give you more. If you are investing in appreciating assets, like getting a property and then renting it out and deriving rental income, now you've got a property or an asset that is appreciating on one side, and then on the other side, it's also giving you an income. So that's what I wanted to speak about today. Remember, none of my videos constitute as financial advice. If you are looking for financial advice, please speak to somebody that is certified and registered with the FSCA. For a recap, those 4 investment objectives are capital preservation, capital growth, income generation, and asset appreciation. Mwah, 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 mwah.